Good morning, everybody. Welcome to the Singulus Q3 9-month earnings call. I'm very happy to have with me Mr. Lieberwirth and Mr. Arendt, who are both members of the executive board, and Mr. Hans, who is the director of finance and accounting. They will walk us through the company's performance thus far and the outlook for the remainder of 2025. Before we dive in, quick housekeeping note. In case you do want to ask questions, you will have two choices. First one is enter your questions into the chat box. Please state your name and your company name before the question so that we know where this question is coming from. And also after the presentation is over, you will be able to use your microphone to ask questions directly to the management of Singulus. With this in mind, I will now, I would now like to hand it over to Mr. Lieberwirth and Mr. Arendt and Mr. Hans. The floor is yours.
Good morning, everybody. Welcome to today's session. We are in Germany, and Karl, Mr. Hans and myself. Mr. Arendt is traveling, so we have him on voice only. There is no video connection that we could establish this morning. So we want to open the floor with the financial reports that Mr. Arendt will present.
So good morning, ladies and gentlemen. Warm welcome from my side. Sorry for the inconvenience, but as Lars Lieberwirth already mentioned, I'm traveling. And I think it's nicer to hear my voice than seeing the picture. Let me run you briefly through the key financials. So let's move on to the next pages. You all know about Singulus, and you will learn a lot more. I hope you can see right now the financial page, because I can't see it.
Yes.
Okay, I can't see it. So, but you should see the key financial figures.
Yes.
So you see that the 9 months are with the revenues of 44.3 million, and we have an order intake of about 30.9. We will discuss the revenues later on our P&L slide. Order backlog is about 64 million. EBIT is slightly negative, minus 2.5 with an EBITDA of minus 0.7. What does that basically mean? Let's have a look at the order intake. 30.9 is way too slow. It's not enough. We all know that the order intake in the first 9 months didn't achieve what we've been expecting. You know all the global background of that. At the first 9 months, we've seen a lot lower investment in production capacities worldwide, especially in the Western world, and that is kind of difficult. In China, we do see investment into semiconductors and some life science, but semiconductors in Asia, a good issue, and so we have seen some order intake there. But and you know that the shareholders' equity is negative, and we're trying to improve that, of course, and we'll see that we find solutions in the coming months to change that. Let's move on to the P&L on the next page.
Yes.
Okay, so I guess you see the P&L right now. Then it's the already mentioned 44.3 million, which splits up, the revenue splits up into solar, having 13.1 million, semiconductor with a 15.8, and life science with 15.4, adding up to the 44.3. The gross margin is still very healthy. And this is something we are watching very much. You can see that the single projects are profitable, and we are working very efficiently, and this helps us, of course. But we have an underutilization, and you can see that in the EBIT, in the result. OPEX is in line with the expectations. We try to be very cost sensitive. We're moving down the OPEX, especially in some areas like sales. G&A is difficult, but slowly we're moving down. So we're in line there, looking for all kind of savings to get it even lower. So as I said, but we have an underutilization in the organization due to the lower revenues, and this leads to the minus 2.5. However, you read in the report, and you have read already, our MAR announcement, which we handed out earlier. So we have given a guidance of about 65 to 80 million, which we want to achieve by end of the year. So coming from the 44.3, how can that work? Basically, we do see some projects coming in. We do see, or we're expecting them to come in. We do see that we have some existing assets we want to sell, and there's some sale of trade goods, which we are trying to achieve. So we think that the fourth quarter could be an interesting quarter, and we're really hardly working on that. So this is why we have the guidance out, and we expect it to be somewhere between the 65 and 80 million in revenue in total by end of the year. So let's move on to the next page. I guess you see the balance now.
Yeah.
Okay, and then we're very tight on cash, so we're watching our operational cash flow very tightly, and this is a big issue. And we also have still some restricted cash, and this means that if you have a look at our total current liabilities, so they are going up, and we are having current liabilities by now of about 90, close to 80 million, and so we have to do quite some refinancing in the months coming. And we will keep you posted on that, and we're working on this to find good solutions, suitable solutions, and are discussing already some means and measures for the refinancing in the coming months with interested parties and interested investors. So this all is, of course, based on the operational performance and the strategy we do need in the months coming. And on the pages following, we can move on to the next page. I think it's the quarterly financials. Sorry, my connection is not that good. So you can, it's the segments. You see the segments for the 9 months. Then it's that semiconductor plays a significant role by now. Life sciences, good, solar. So it's quite evenly distributed almost. Which is good, but on the other hand, we expect with larger order entries in one or the other segment to move forward, and this might be just snapshot for the first 9 months and can change in any direction depending on order entries. Let's move on to the next page.
I want to continue with an update on our business.
Yes, yeah, let me hand it over. Okay, but it's fine. Just let's get started, and thank you very much for listening. And I'll be happy to answer all the questions coming later on. And Lars will give you now a picture on our strategy and the operational performance, and then you get a better picture how we want to achieve our results and objectives in the months coming. So thanks, Lars. It's yours.
Thank you. I would like to continue with an update on the business and the content of work that we are progressing on. We continue to make a good step forward in our deposition technology from micrometer to angstrom, especially in our semiconductor business. The extremely thin angstrom level deposition technology plays a very, very crucial role, and it helps us to refine our ability to have a unique solution, particularly in the TMR, GMR, AMR sensor space. We are on a very good road in terms of process development and application development, and we are engaging very, very deeply with customers in those key sections as we highlight here on this page. The overall system development on the next page continues to be well. We are working our ways into foundries and fabs. We have a very good inroad to develop our tools further to be capable in mass production settings, and that's a key effort of the recent months to continue our journey and make sure that our portfolio is ready. Historically, we have been working a lot on the institute level, and as we go into fabs, we are refining our platform. And we show you here an example of these systems. There's a lot of detailed work that the team is working on to make those tools and hone them to be more and more industrial capable. So we have taken an active road to go from academia into production settings and refining our tools and modules. That's a business that the team is actively pursuing, and as our individual modules are getting stronger, we develop the processes together with that, and then we are able to offer those total solutions to customers for those applications. Similarly, we are progressing in our life science business for the chemical machine. We are building right now another system, again, for the contact lens industry application. We are working with the team actively on applications outside of the medical industry, but the eye care industry, but also going into the pharmaceutical industry. The machine requirements are very same or to a large extent identical, and we are hoping to have a good inroad by bringing the good experience and track record that we have in the medical industry also to pharmaceutical application for cleaning systems, for extraction systems, and leveraging the experience built in the eye care market to other segments. That's a very active area that we are pursuing. Similarly, in the second lifetime aspect on the production systems for 3D coding and lacquering system, we make progress. We are having in our factories right now 4 machines. We are shipping out more in this current year. And the team has done a tremendous development to enhance these systems through an additional process that we do in the deposition technology that offers a new type of a visual effect that we have tested with customers in the consumer goods industry with a very, very positive feedback. And we're excited to share in the next few meetings more and maybe show some photographic examples of what that is capable of and why we are confident that the market will receive well. Coming to our solar division, we remain strong in looking more towards tool systems that we can offer towards a turnkey solution, while we are selling today individual tools to particular players in the solar industry. We see there's a trend towards turnkey, and that turnkey means also a technology combination of those vacuum deposition systems together with systems in the wet chemistry. And the efforts that we are playing are really paying off to combine those technologies. We can particularly see that in the perovskite application for tandem cells. What you can see here is the combination of our technology for crystalline cells together with perovskite to deposit a second layer of a solar cell on that to catch a wider spectrum of light. We also have, and we shipped one machine, and we are going to ship shortly another one machines to customers who deposit on glass for what we call a 4-terminal perovskite system. So where the perovskite as itself works standalone together with another cell technology, and that offers a unique way to go forward and allows us to sell machines for perovskite technology that are then complemented by the customers with existing cell technologies. We see here our effort playing out. I just mentioned that a few times, of combining our technology platform in vacuum deposition technologies together with our wet chemical systems in the recent months. We completed a laboratory at our site. We are in the progress of ramping up that laboratory and getting it ready to be fully operational. We are testing certain elements of that, and soon I think we have a very comprehensive capability in our lab setup. And this interconnection, or that cross-section between vacuum technology and the wet technology, is what we are using for perovskite, what we are using for solar, but it also plays very well for the newer application that we are working on, such as the battery industry. In battery, we continue our roads. It takes a bit longer than what we expected. There's a lot of testing going on with customers, a lot of sampling activities, and those very often rely on a combination of wet chemical process steps and technology steps, followed by a deposition step. And the effort, I'm very certain, will pay off. We have a unique technology offering to customer, and we continue to be very, very engaged for those next generation batteries. Similarly, for hydrogen application, we have the same kind of technology footprint, a combination of wet chemical steps together with deposition steps. And our focus here is especially on electrolyzer systems and components for that. So we're not making the electrolyzer, that's not what we do. It's components for electrolyzers. It's a very specific market segment that can play to the strengths of Singulus. And interestingly, the electrolyzer and hydrogen business has a very good synergy with upcoming technologies in carbon capture. For carbon capture technology, the wet chemical systems play a very fundamental role, and a lot of the technology footprint and platform being set up for hydrogen, we can see is being developed. A lot of players in that market go to the next level on transforming the hydrogen molecule into a higher level molecule, and that enables different kind of carbon capture technologies. So we started those discussions with the market. We are working through first project proposals, and we do see that direction is very well. And later we share you some of our activities also in the market and how we go to market. We have been very active to pursue our exhibition and also the whole sales and marketing approach. We are showing you here an example of the solar event that we participated, or events that we participated throughout the year in Spain, in the US, in Germany, where we present our solution and engage with the market. There's a very active discussion going on, and we still remain very positive for the solar industry overall. It will take some time, but it's coming. The semiconductor side continues to be the most busy of those kind of meetings, with a heavy focus in Taiwan, China. We recently also engaged in activities in Korea and other regions of this world. There's a very high level of interest as well for front-end semiconductor application, where we are engaging with our systems for deposition systems, but also in unique back-end application that require capabilities that typically you would find in the front end, especially with our very thin and homogeneous deposition systems. So that's something that continues very well. Later in this month, in November, we will be in Munich. Maybe some of you may join there. Happy to talk. You see here a layout of the booth. That's one of the very important semiconductor shows for us. We expect a very international, global group of participants going there, including from the US. And that's a great event for us, and we have planned quite a few activities with customers around that show for new business and continuous businesses. We just talked about the hydrogen market and carbon capture. You see here a great example of the recent activity in Hamburg. the show remains what we think a very leading event. There's a very high quality level of participants joining this event, and we continue our journey there, just as we do in the life science and sector. So we remain active. We actually try to be more active than before, honing the way of how we present the company, how we present our offerings in different geographies. And we want to remain very, very active and more active than ever on the sales marketing side, but also the listening to our customers, understanding their exact requirements, and coming up with proposals on how our solutions can provide answers to customers' active questions. And that we are doing across all our different business segments very, very actively as we hope here. As we show here. So we hope that provides a good summary on where we are and where the confidence is coming from, that we, despite the very challenging situation that we find economically at the moment for the company, but also for the overall market and industries, we remain positive that we have a way forward to overcome those hurdles. And we do have a good and strong machine offering. We expand our efforts on process technologies that runs with the machines, that provides those solutions to customers, and our future is positive. That's a key message that we want to share with you today. Thank you very much.
Thank you for the insights. I guess I'm not sure if Mr. Arid is still with us on this call. Otherwise, I'm sure that the questions that will be coming are in good hands with you, and we already do have quite a few questions. I will quickly change to another slide because, as I mentioned before, there are two ways you can ask questions. One is through the chat, and we've already received quite a few questions here. The other one will be through the microphone, and if you want to ask a question using your microphone, please put the word question into the chat, and then I will open up your microphone, and once that happens, you can open up the microphone on your end as well. You can see this on the slide what the process here will be. So in case you do want to ask a question using your microphone, once again, please type question into the chat box so that we know you're interested in voicing a question. Let me look through the questions that we have already received, and they are dealing with different subjects. Of course, one of the major concerns is the growth initiative and when that growth will actually be realized. Let me start out with the financials though first, because you did talk about looking into the financials and refinancing. Is there an insight that you can share with us where you stand on the current financing and what ongoing discussions you're having? And also, and that's a question that came up several times, if the bond repayment will be safe.
Yes, let me, can you hear me? I don't know.
Yes.
Still on, so. Okay, so let me briefly answer that question. It's still an early stage to talk about the bond repayment, and we do know that the bond will be maturing in July 26, end of June, the second half of July 26, and we will be repaying them at that point latest at 105%. So we will see what type of measures we find to replace the bond, or we will also see, depending on the strategic outcome and the outcome of our, let's say, the strategic initiatives, let's put it that way, in the next months, whether we have some discussions with our major bondholders. If they change their mind, remember we had we approached our bondholders to extend them. At that point in time, there was the denial of the extension due to the fact that we couldn't somehow convince the major bondholders to approve to extension, and that was kind of related also to the strategic and economical decision of Singulus. So right now we're still bouncing all thoughts, discussing with new investors on the debt side, and we still have some spots which we are discussing and trying with different players in the market. So it's too early to give the market some background information or insight into the discussions we have. But we will be, of course, and we're also in touch with all other debt holders with the super senior loan and others. So we're still in those discussions, and we will keep the investors informed on the steps once we're ready to talk about them, and once we have let's say a stage where we can really talk about it in terms of realization. This will take a few months to go, but we're very confident that we can achieve that in, let's say, by end of first quarter in 2026, which gives us sufficient headroom with all options. So we will be getting back. That's the key message we'll be getting back once we can nail that down.
Thank you. Let's look at the nine months figures. One of the questions coming from Thomas Schießler was related to the order intake. I think you gave us a breakdown of the revenues in the first 9 months. Do you have a breakdown on the order intake for us as well?
Traveling right now, I don't have the breakdown at hand. I don't know whether Oliver Hans has it, but basically, I guess it's roughly the largest order entry is like with solar and semiconductor, and life science is a little bit smaller. So my guess would be about, let's say 40-40-20 or something like that, but I might be wrong. Oliver, Hans, do you have like a better figures in front because you're at home?
You're completely right. Yeah, regarding the breakdown. Yeah.
Okay, so that's basically
that's more or less. Yes.
All right. One of the reasons for the revision of guidance was a delayed project award. Can you see, or do you have visibility as to whether or not that might actually be realized in the fourth quarter or going forward? And I think one of the reasons was also the competitive environment. Do you have an idea how that's going to pin up for this order?
We have a very good reason to keep that guidance as we suggested. The situation in the industry is a bit uncertain, we can say. There are a lot of overall geopolitical considerations. There's a lot of politics going on. People are waiting what is happening. There's a question what happens with the US shutdown. Are things moving? Are ports open? There are just the entire totality of a question is huge in the room, and that's also leading to that uncertainty exactly about the timing and by what timing we can do what. We're also considering some activities where we do have a higher amount of things that we would sell through. That has to do with the nature of those projects, and depending on how that plays out, we may see different timeline on realization that in the quarter or short after. It's a very hard time. We're in the middle of November to really forecast what we can do in the coming weeks, but the team is working intensively to make sure that we are realizing this as quickly as possible, and we do have a good feeling where we stand on the customer negotiation, and now it depends really on how quickly that solidifies.
All right. Following up on the solar space, Thomas Schießler is wondering about thin film investment in China because he says that experts are pointing to insufficient perovskite performance. Sorry, I stumbled over that word. Perovskite performance, and he says that investment is staying somewhat hesitant. What is your impression regarding this?
Yeah, Mr. Schießler is exactly right. That's also what we see. There was a big bubble and a hype in China, very particularly, but also across Southeast Asia on perovskite application. There were a lot of people very enthusiastic to go in and invest. these investments have stopped. We see there's a consolidation happening. Investors are extremely cautious and they're waiting to see the first lines. With my own eyes, I have seen very large installations of equipment in Asia in the gigawatts scale, something of unbelievable size and professionalism, how it's been set up. But whether those processes have been properly vetted and qualified to be stable on the long term, I doubt that personally a little bit. And that doubt, I think, is echoed by investors. People are more cautious, are careful because a lot of preemptive investments have been taken, and they still have to prove if their systems are running stable. Our Singulus projects are not in that space. So we are not following a single of those perovskite projects in Asia. There are other players involved. We are watching that very actively. Our activities and business and customer activities are outside of Asia. And that is something we are very proud of and gives us a confidence. We see there are different approaches in different regions of this world in terms of qualifications and how solid are those qualifications being done and the metrology that goes behind. And we feel confident that we do have the right players engaged with. And we echoed indeed what I just said, the very practical and hands-on approach in Asia that we see critical.
All right, as a follow-up question to that same topic, the weak order intake that we've seen in the first 9 months Q3, do you expect that to spill over into 2026 as well? And if you could be also a little bit more granular on where the challenge is it internal execution challenges, or is it broader weak and soft capex in the overall market that might actually be lasting for a little while longer?
Yeah, the external factors are overwhelming. There is a weak industry who is very cautious on spending capex. That's a factor, of course, that's amplified by all the political turmoil that we continue to see. Tariff discussion, companies and customers considering relocations of businesses moving from one country to another. So we see that in quite a few projects where on the last minute suddenly decisions are being brought up about alternative locations of manufacturing. There is a trend to do more things outside of Asia than there was before. And as those decisions turn up, we do have delays in this order intake. That's true. Internally, I don't see that we have huge challenges. We worked through the last months very steadily on our internal capabilities and our execution capabilities. That has to do with the way of how we are processing machines, the way we design machines. We had major efforts to make sure that we develop more standardized systems or more standardized interfaces between systems. So that gives us on one side the flexibility to offer a broad range of different machines, but we are able to qualify those machines module by module in a much better way in our own factory. And that gives us more flexibility and also is reducing lead times in projects. So that's something we see particularly in our semiconductor market. We have changed the way of how we are building machines instead of doing this all in one spot, how we did traditionally. We have splitted that up. That's a continuous effort going on, and I see further advancements coming up, but that allows us to react more quickly and offer a shorter lead time. So our side in terms of the supply chain is getting stronger. We additionally did work to look at where we buy and source what, with whom we do what. And as we continue to refine that, we have to also refine our design of equipment, because that goes hand in hand we need to make sure that the design of machines is in a way that we offer that flexibility to our customer. So I think our homework is not done, but we are very well on the way to enhance our capability.
Could you give us a little bit more color and insight on project wins in hydrogen and battery, and maybe a little bit more granular as to size of the order, what customer type is behind that, timing or scale, and when you expect that to contribute to revenue? The question, by the way, comes from Abid Jarrad of MWB Research.
Okay, yeah, thank you. So the battery market remains very interesting, especially outside of Asia. Particularly the US is interesting in terms of the geography, but we also see interesting activities in Europe for specialty batteries. And the area where we try to play an emphasis is the combination of processes on those wet systems to remove, for example, certain oxides, which are often an insulator in a battery. So it's a chemical process to deal with that. And then we need to dry that out in a protective gas atmosphere to transfer that into the deposition system. That is a complex steps. It sounds easy to do so, but a very low concentration of oxygen very quickly lead to an oxidation to a degree that we don't want, particularly for those titanium systems that we see in the hydrogen application. We also see a lot of work for porous substances. So the design of systems is changing a bit, and we have to deal with quite a few porous structures. So there are questions about how do you penetrate a porous structures with a lot of holes and caveats that we need to reach in, and then how to do this transition between a wet machine and a vacuum machine. So that takes time to qualify. We are working through that. That's a steady process. That also requires our laboratory capability. I just mentioned we built throughout the year a new chemical lab. We are bringing this slowly online for a few applications. We are there already, a few others. It takes step by step to do this kind of a qualification work. So I do see more work in terms of commercial impact in 2026. I think we are well positioned, and those companies very often are companies who are either out from a quite well-funded startup scene, but we also see some large players entering this. And the larger the company goes, we see the slower and the more cautious decision making is there. So the more quick business win we see definitely from those very, very agile smaller players, startup companies, spin-out companies. And that's our key focus. And they have a very interesting approach to innovation. They're working with us very hands-on and allow us also to build our knowledge and carry that into the equipment.
Thank you. Klaus Bachmann of Bachmann Holding is asking where you see the strongest growth opportunities over the next 3 years. What's driving revenues and profitability mainly?
Yeah, revenue and profitability, maybe two things. So on revenue and profitability, I believe semiconductor is the place to be, and to really drive additional capability in realizing more revenues. I see by us being able to bring our technology for extreme thin and precise deposition that we use in our magnetics and spintronics application into other applications, such as memory. We see a very, very good trend in memory, as well in inductors. So that's on the front end area. There are, interestingly, a couple of players also outside Asia who are working very actively on that. There's a very interesting community about inductors that is forming for application that recently we had not so much on the radar screen. So we are very positive and pleased to see that. We're working through that. The challenges here are that we require extremely smooth and particle-free deposition because of the nature of how that works. And those are qualifications and work our machines have been proven to do well in spintronics, and we are now reapplying that into this industry. An additional level of growth I see in advanced packaging application. That's something where Singulus has not had a big footprint in the past. That's something that we emphasizing a lot recently. Therefore, also the new laboratory that we are building side by side with our existing vacuum lab, and there are interesting application, especially in advanced packaging application that we see have a major lever to create focus in terms of profit and revenue. Less a profit driver, more a revenue driver. We foresee the solar industry. We still see large projects, especially for tandem application, but it's a much more sensitive market. And we need to answer that by having a complete system and a combination out of different systems, wet systems, vacuum systems, but the margins there are definitely lower. There is still a significant revenue driver that we see going forward.
Thank you. Speaking of your laboratory, Thomas Schießler is wondering if that is run as a cost center or a profit center, and if you could give us some insight as to what the P&L effect of that laboratory is.
Yeah, at the moment, the laboratory is not fully approved in all aspects, so that we have that also in terms of an asset booked in our books. We are in the qualification of that, and the moment that qualification is, then we will activate that. And the moment we activate that, we are looking at that as a profit center to drive. So it's a profit center that we really want to see that the lab team is also working against financial goals and selling their capability well. We have paying customers who are already today using our lab sources, not just on the wet lab, also on the vacuum labs. And that's something that we want to emphasize in. It is as well serving as a profit center to our internal sales teams to work with customers in terms of project acquisition. So the answer is very clearly that we are more profit center driven in terms of the way of how we want to set that up.
Thank you. We're coming to the last question, which is a comment and a question combined. Unfortunately, I don't know what company it is being asked from because the company wasn't stated, but it basically talks about some frustration with the share price and the operational development. And the question that results from this is, you do have great technology, no doubt about that. There are potential markets where you could sell that technology to, which could result in quite interesting growth rates. Is there any catalysts that you see beyond what you currently have? Because obviously, I mean, there is some capex softness in the market on the one hand. On the other hand, it always maybe takes a little longer to get this technology to the market and for the market to accept that technology. Is there any major catalyst, be it on the regulatory side or on the technology side, where you can say this is really the big thing that we will see over the next 12, 18 months that might change the story?
So I don't see that on the regulatory side, but I see that in terms of the mindset that we have in the company, and that I'm trying to force a culture change also in the company. For too long time, Singulus and a lot of the Singulus people see themselves as a machine company. We're making machines. We are showing to customers very proudly our machines in the production area and so forth. We have to shift that perception, and that's a perception not just to the market and to the public, but also internally. It's a culture change, and that culture change I'm looking forward is that we are talking significantly more about what our equipment is doing and what's the process that we are running with that. And so that's something that we are working through. And by doing so, we also see a different level of engagement that we see from our teams and in the interaction with customers. So if we are focusing more on what the machine is doing, what a sensor stack is doing, what that particular working parameter of the sensor is that we are doing, we understand the application from the customer much better and are able to transfer that knowledge and that insight more into the machine business. So I think it's a question that we really have to work on ourselves, on driving our destiny, making sure that we understand ourselves as being a material scientist-driven company, an application-driven company. We need to be super engaged in terms of what it's done with our machine, right? What the deposition is doing, especially in semiconductor, right? Give you an example, a classic magnetic semiconductor layer has something like 40 layers that we deposit one by one. And while you do that, the magic happens in the first few layers that are super thin, and there's followed by a sintering process, and then you fuse all of this together, and only after that process the whole thing starts to work. So we need to understand these terms extremely well and be more engaged with the customer. And once you're working on a sensor, you will find a customer is using the sensor at different application, at a high temperature, low temperature, at a high measurement speed or a slow speed, whatever it is, right? And that requires a different process development. So I think the mindset and the big culture change that I'm trying to emphasize is let's talk more about the process and what we do, and the machine is the tool that is doing the process. And I think that is that is to me the big catalyst that also helps us to crawl up the value chain, to have deeper and more meaningful discussions with customer, and where we can differentiate ourselves in the market.
Thank you. We've got one more question, which looks like it is the actual last one, and that's from Thomas Schiessel again, the outlook for Medline fiscal year 26.
For Medline.
I couldn't understand that. Could you repeat for midline or for the
midline?
For midline. Before I typo, midline. Yeah. Sorry.
Okay, sorry.
We have seen like an investment cycle. I think for the question, Mr. Schiessel, so we have seen an investment cycle the last 2 years, and that was very, very good to us because we could deliver a lot of machines. We've seen that it's been slowing down a little bit in 2025. And this was basically due that the Medline business is a lot related to the contact lenses, and contact lenses are related to the growth of the global GDP because it's which is distributed all over the world in global markets. And so we expect that the markets pick up in 2026 again with more capacity needed. And this is what we also see from our customers, that they are planning to expand with capacity in the months coming. So in 2026, we do expect that there will be order income and growth on that area with new technologies. And this is basically what we expect.
Yeah, and I want to add to that. I think important is this. How are we able to bring the Medline into a new or similar context, right? And I hope at some stage we are able to talk about a pharma line maybe. So in the medical industry, there are certain applications, but that tool is also well capable to serve a certain pharmaceutical application. And that's a different market, right? With different asks, different requirements. In terms of what exactly the machine is doing, but the processes and the standards the machine built are very comparable. So that's something that we are working on, and it's one great example of are we able to manage that shift to a material science company, to someone who sees the solutions a little bit more than the machines. So that we can have this kind of a decision and conversation with customers to expand. And it's a great platform. It's a great machine, and we do have a good capability for that. So it's really in our hands to do that. The pharmaceutical industry, however, is also an industry that is very conservative in their decision making. There's a lot of qualification. There's a lot of pre-planning. There are usually very huge investments that they take. So we need to get into that right window, and that's something that we are actively pursuing.
Thank you. I guess this concludes the call. Thanks everybody for participating.
Let me finalize with one sentence also, just to make things clear. So it's just like for all thinking that all of you have been attending our call. It was, I think, a very good call, and I just wanted to state that, and you know, you're seeing that Singulus is on a good path of transition, and we have got a lot of impulses from Lars being on board and in the executive management in the last months. So this is something where we are up and moving towards new areas, towards improving our technologies, to more procedural process thinking, what Lars just has explained. So we have a strong core of technology. This will help us. Of course, there are some challenges ahead concerning the liquidity and the maturity of our debt in the first half year. And this also, of course, adds to some risk of the company, and everybody has to make sure that he understands where we are. But we do see that we have very constructive discussions and with our customers, and our expectation is that we come to positive conclusions on our projects ahead, and that we convince our customers in the months coming, as well as we are convincing our bondholders, our other debt holders in the months coming, that they follow us on that way of transition we have started this year. And I just wanted to thank Lars because he gave us a lot of impulses on this road. So hopefully everybody stays tuned, and we get the chance to talk with you in our then annual figures conference.
Thanks for the summary, Marcus. Safe travels to you. And of course, also thanks to you, Lars and Oliver, for participating and shedding some light on the recent development and the outlook. I wish you all a great day, and see you again soon. Thank you.
Thank you very much.
Thank you. Bye-bye.